Hi, it's Karen Orr, and I am here with Kathy Kleber, and we're going to talk about some interesting things in the marketplace. We're going to talk about the cost, potentially, of waiting to buy, waiting for rates to come down, waiting for appreciation to stop. And let's take a look at, this is a tool that I access from MBS Highway. They access tools from the Mortgage Bankers Association nationally. They access information from Black Knight and CoreLogic, who collect data about appreciation or depreciation, home values across the country. And I can do this this example for any place in the United States, but I'm going to do King County. I'm going to do Washington State, $800,000 purchase price. Now let's take a look at kind of what we were looking at here. I did a rate of 6.875, an example of today's rates. Even if we had a substantial rate drop to 5.875 right away, within 6 months, we're going to be looking at the data from that lens. And we're going to see, what do the numbers tell us waiting at 6 months, waiting a year, waiting 2 years, waiting 3 years, right? And you can see that there is projected appreciation in our marketplace. And that is one component of the cost of waiting. And so property appreciation is going to go up. And you can see here, we start out at 800,000. After 3 years, we are almost to 900,000. That's almost $100,000 worth of appreciation or net worth that someone could potentially be losing with the waiting. People a lot of times talk about payment. You can see the payment at the 6.875 is slightly over 5. And of course, it would be less when it drops to 5.875 in 6 months. But very quickly, it starts to catch up. And in 3 years, if we are not refinanced before then, you're actually worse off because you waited, and now you're buying a $900,000 house instead of an $800,000 house. And even if rates are lower, you're paying more in your monthly. So here's where we can really see it pretty, pretty significantly. So you can see the payment difference, if rates were to drop, was about $400 at the 6 month level, and so on across the board. And again, you can see over here, after 3 years, it's worse. There are two other components to the cost of waiting. One, we talked about appreciation, and I'm going to talk about two of them here, and lost amortization, which is a big fat word. But basically what that means is the monthly payment portion of your mortgage that goes to reduce the principal of the loan. And if you're renting in particular, you are just, giving that to the landlord, not to yourself. So the cost here is $68.50. And you can see here, after waiting a year, it's $25,894. Heck, over 70 and almost 120,000 there. So basically, it is a significant cost to wait. So when I'm talking to clients who can afford to buy now, I'm saying, hey, buy now. We're going to have an opportunity to refinance you in the future. I can't guarantee it, but it's inevitable. Rates are coming down. They're already starting to. And we're going to see here, it's not a huge significant number at 6 months. However, at the 6 month point, you've even covered the cost of a refinance if you were to refi at that point. So again, significant savings. And this is just another component of another visual of the component. Waiting 3 years requires more down payment and closing costs. And 6 months, a little is required. At 3 years, a significant amount is required. And then you can see over here, again, this is just another visual of the monthly payment, right? Where it really does, after 3 years, start to you're in a worse situation because of the appreciation. So again, very happy to run these numbers for any property anywhere in the United States. And I hope this is good information for yourself, or you can share with family and friends. And thanks for listening.